Hedge funds are making unprecedented multi-billion dollar bets against the US stock market, signaling expectations of a devastating crash that could wreak havoc on retirement savings across America. I'm here to prep you for what is potentially to come Monday when the stock market opens. Wall Street is predicting a little bit more than just your average sell-off. Dow futures are down 340 points in response to Trump's tariffs on Mexico, Canada, and China, apparently. Now, we actually known about these tariffs, and people are calling that the market is overreacting, but we have called what is actually going to cause the market sell-off, and we have some more additions to what that could be. Warren Buffett just moved $234.6 billion into treasury bills, holding more than the Federal Reserve's $195 billion for the first time. He's getting ready for something big that's not just your average market drop. $2.7 trillion in commercial loans need to be paid back in the next 20 months. These loans started at a 4.3% interest rate, and now they're at a 6.2%. So a $100 million hotel, for example, with a 3.5% loan pays $3.5 million in yearly interest. At today's rate, that jumps to $7 million. A property that nearly makes $5 million a year, but now it needs to pay $7 million in interest. That's a $2 million loss every year. No bank will give a new loan to a property losing money. On top of that, the value drops from $100 million to about $48 million for that hotel because banks will only lend based on the $5 million yearly income. The same thing will happen thousands and thousands of times over the next 20 months. We are not only in a real estate crisis, but they may crash stocks to save bonds, and here's why. The US government relies on bonds to fund itself. If bonds collapse, the entire financial system is at risk. Foreign demand for US treasuries has declined, meaning the government has to attract buyers. This requires higher yields, which means lower bond prices. But if bond yields rise too much, it blows up the debt system, making interest payments unsustainable. The solution: to crash stocks and trigger a flight to safety into bonds. Now, they may raise interest rates or keep interest rates high, which makes stocks less attractive versus bonds, leading to an equity sell-off, forcing institutions to reallocate into safer assets, aka bonds. Commercial real estate, regional banks, and over-leveraged companies collapse, forcefully selling stocks. Investors panic into treasuries, boosting bond demand. Hedge funds get margin called. Over-leveraged hedge funds, if they unwind, they must sell stocks first. The deeper the crash, the more institutions rotate into quote-unquote safe government bonds. In 2008, stocks were sacrificed to drive money into treasuries to stabilize the system. The Fed eventually cut rates and printed money, but only after the system was reset. Will they let the system reset? Now, here's what this could potentially mean for GameStop, and I want you all to take a deep breath and hold your breath when the 8 p.m. overnight opens and the market opens this entire week. All speculation as of right now before the markets open, but expect GameStop, AMC, probably any stock you're holding to dump and drop with the market. Now, this doesn't have to happen, but there are several reasons why this could actually happen. The systematic risk could trigger a forced unwind of hidden shorts to get margin called. If liquidity dries up, brokers and market makers might be forced to close synthetic short positions, leading to unexpected volatility. And there are tons of things that could bring us into the MOAS if the system ends up collapsing. But you have to remember, the initial reaction, the initial drop would technically be good for short sellers until something breaks. Very similar back here during the Volkswagen squeeze, we had a 52% drop in the span of 1, 2, 3, 4, 5 days. So basically one trading week. If you look at GameStop, what would that mean? That is not necessarily going to be the case. In fact, we already had about a 23% drop, but that would bring you to between 16 and 13 bucks. If that were to be the case as a bottom, and again, it would be a flash crash. I'm not calling for this. GameStop could explode right here alongside AMC, but I'm just warning you to, again, hold your breath. That's all. Just take a deep breath and hold it. Now, Trump has said the pain from the tariffs will be worth the price. Early indicators are showing a long, multi-front trade war. Even Wall Street Journal posted that this is the dumbest trade war in history. And as speculated yesterday, we now have confirmation that this is going to be a trade war. Trudeau responded with a 25% tariff, $30 billion this week, $125 billion in 21 days. What do you think happens potentially in 21 days? This does not have to happen, but you know Trump, you know his ego. He might just say, bang, we're going to up tariffs on you if you want to add tariffs on us, right? We're going to bring it up to 50%. Who is going to max out? So we have US placing a 25% tariff on Canada, placing a 25% tariff on Mexico, 10% tariff on China, and then you have Canada placing a 25% tariff on US, Mexico preparing retaliatory tariffs against the US. But here's the real question. What is China going to do? They have been somewhat quiet. Early on, they have said that they will take retaliatory measures against President Trump's new tariffs, but they have been quiet under the rug as of right now. Or have they? Taiwan reported 14 Chinese military aircraft cross the median line. Are we going to see more than just a trade war? Leading us into, on top of the futures bloodbath that's already happening, cryptocurrency. $135 million liquidated from the cryptocurrency market in just 1 hour, and it didn't stop there. It is continuing to pour out of the markets. With Bitcoin testing 100,000 probably 10 times now, it has failed once again to continue to trade above it. Now trading at 97,350, breaking below a key support level right now on the fib that we have drawn out. Here we have the Bitcoin power lock corridor on a logarithmic time frame on the weekly time frame, and I've talked about it before. Once we break this green line, you officially enter to potentially head towards all-time high. Now, I do want to warn you of the potential downside risk, even if things don't come to a complete collapse and we see a system reset. Take a look at this pullback back here before the 2017, 2018 early, right, Bitcoin rally, which is the most gains that Bitcoin has seen in a bull market. We saw from this green line, so very, very respectively, right, from a break back into it, we saw about a 28% drop. Okay, from this point, okay, this would bring Bitcoin down to, coincidentally, around 71,500. I say coincidentally because that is actually a very important level for Bitcoin to actually might need a retest on. 72 to 73,000. It's a very, very important level for Bitcoin to potentially retest before getting a massive move higher. And that is because that is where we would base off of structural support, okay, where Bitcoin kept testing that ceiling, tested the ceiling, tested the ceiling, tested the ceiling, finally broke out, consolidated above, but we might need to test that ceiling as support instead of resistance and make it a floor to move higher. It's just a potential outcome, and that is if things only don't collapse, okay? That's also going to lead us into XRP. But really quick, I also want to note there was this bearish diamond pattern on Bitcoin, and we broke below. And then the last time we were at above 103,000, you had a head and shoulders pattern, okay? Broke below, broke below. The SPY did a very, very similar thing, right? And I'm going to tell you where I think the SPY is going to go potentially. At least I'll give you a warning, right? Bearish diamond, broke below, came higher. Now it's starting to break below. I think that's just an indicator as to where, I think Bitcoin's an indicator as to where the SPY could potentially go, retesting the relative lows that we seen on January 26th, 27th, right? Which is right down here at 590, which is also where I want to give you that warning. Expect gap down when overnight opens, at least personally. Again, nothing I say is financial advice. I'm not a financial advisor, but this is what I am potentially expecting. And again, if this is all overwhelming, please be in the Discord so we can chat. It's way better to have a community than freak out about this on your own. I'm expecting a gap down, and I'll give you the levels between 592.60, okay, and 588. I think we hold down here, okay, and potentially maybe even consolidate. I don't know where we're going to go from there, and I want to evaluate that from there because even that call out is already a big call out on the market, okay? The market isn't used to dropping 10 bucks, but I'm telling you right now, that's probably what we see overnight. Maybe, maybe not. Okay, so I'll warn you for that. XRP cracked beneath $3, which was a key psychological level. And I think a lot of people might be left holding the bag. It's trading at 255, and I don't know how hard it's going to continue to sell today, or if it's going to hold above this level at 255, 256, which is ultimately what we want it to see. But I could see XRP coming down between 220 and 197, 196, right? If we break below that, then things are, I'm just going to say right now, the floor is going to crack beneath XRP and a lot of other cryptos. That is if we crash. But again, if it's just a flash down, I see a buying opportunity at this zone. That is major structural support for XRP, and I think that's a good spot to potentially add some more bags. Nothing I say is financial advice. I'm not a financial advisor. If we break that floor, XRP could come all the way back down to 112. So I just want to warn you for that. Meme coins, I'm going to use Bonk as an example. This is very, very important as to show where we are in the crypto cycle, in the crypto market. This thing has seen drawdowns of 73% time and time and time and time over. And I think a lot of meme cryptos see something very, very similar. Okay, 73% drawdown, 74%, 65%, 73% would bring us right down to this fib level at around 4016600 on bonk. Now, what's also interesting, from this high to the next high, 80 days. From this high to the next high, 85 days. Now, what's different from this high to this high is not only do you see about 175, 180 days, but you had 101 days before a very bottom, and then you had another 75-day period before a peak. So what am I trying to say here? What am I trying to get at? Well, as of right now, bonk is not down that 73% just yet. Bonk is actually down 68% from its peak. So we have another 5% to go before a bottom, which is interesting because if we do hit the bottom, that's also going to bring us about 75, tomorrow, 75 days in. Or maybe it takes us 80 days. Maybe it takes us 101 days. Either way, we're very close, and it would be before March. Okay, so if things bottom, they could bottom before March, and that would be a flash crash to the downside before things rally higher. And where would that rally eventually take you? And that rally would eventually take you, that 175-day period or 180-day period, just based off of history, would take things to squeeze in May, June, the time frame everybody loves when things usually rip during a bull market. Coincidentally, line up right there. So early May to June, these 2 months, we could see another peak for crypto as a whole, and meme stocks, altcoins, so on and so on and so on. Moving on, another thing that I'm going to read to you, since we love to speculate on all of these different types of things that are coming into effect to trigger a market crash, several US banks have been reported to hold substantial short positions in the silver and gold markets, and we recently talked about a silver squeeze, and we are seeing gold squeeze. Notably, JP Morgan has been identified as a significant player in this area. An April 2010 commodities trader and whistleblower alleged that JP Morgan, along with HSBC, engaged in manipulative practices affecting gold and silver prices. These allegations led to multiple lawsuits, including class action suits, though no regulatory actions have been taken to date. More recently, reports from October 2024 indicated that 5 major U.S. banks face potential losses due to large short positions in silver. A surge in silver prices by $1.84 per ounce exposed these banks to estimated losses exceeding $1.3 billion. The Commodity Futures Trading, CFTC, noted that open interest in silver futures contracts had reached 141,580 contracts, each representing 5,000 ounces, totaling nearly 708 million ounces, almost equivalent to a year's global silver production. Additionally, in February 2025, JP Morgan Chase planned to deliver gold bullion valued over $4 billion against futures contracts in New York. This move was interpreted by some analysts as an effort to manage or offset existing short positions amid market volatility. It's important to note, while these banks hold significant short positions, such activities are common in commodities trading and can be a part of the broader hedging strategies. However, the scale of these positions has occasionally raised concerns about potential market manipulation and the overall stability of the financial system. We also have some economic data this week that I will point out to you. ISM manufacturing PMI on Monday, and then Tuesday, JOLTS job openings. Wednesday, ADP non-farm payrolls and ISM manufacturing PMI. Thursday, jobless claims, and then Friday, non-farm payrolls, unemployment rate, average hourly earnings, and consumer sentiment. We also have a major earnings week back to back with last week's, with Palantir reporting on Monday, and then you have PayPal, AMD, Google, Snap, Chipotle, all on Tuesday, and some other important ones as well. Then you move to Wednesday, Uber, Ford, Qualcomm, ARM. A lot of these AI companies, these chip companies, are reporting. Amazon, Eli Lilly, LLY, AFRM. The list goes on and on. This will be an important week, and ELF as well in there. Last but not least, Walgreens just dropped their dividend. Overall, guys, that is what I got for you for today's video. If you haven't seen yesterday's video, it's very important. Will Trump's tariff crash the market? It goes along with this video, so you are going to want to see that. I uploaded that last night, so make sure to go watch that. The top link in the description, of course, is for my Discord server, where I'm in there on the daily. We talk stocks and crypto all day long. I also post my trades as soon as I take them, and it's overall just the best community, best vibes. There's no bad questions in there, so if you're a beginner, come join, ask questions, knock some ideas back and forth, and hopefully we help you level up on your trading journey. It's time to level up and get out of your comfort zone. So join the Discord, guys. You will not regret it. And on top of that, if sometimes you don't want to chat, we have high success trade flow alerts in there, market news alerts, option sweep alerts, dark pool trade alerts, insider trade alerts, and more. There's more alerts in there. So come join, guys. You will not regret it. The second link in the description is for Moomoo, where you can get up to 30 free stocks and earn 8.1% APY on your uninvested cash, meaning whenever you're not taking a trade, you're earning this interest, and then when you're in a trade, you're not earning it. When the trades close, you're earning the interest again. So use this link, open a Moomoo account, it's a free broker, and deposit into your account, and you can start earning benefits. They will give you free stocks, and you get access to level 2 order book data for free, trading options, going long, going short, viewing other exchanges, and more as a retail trader. So do not sleep on that, guys. That is it. I love you all. Hopefully you enjoyed your weekend. God bless. Lottery Stocks out.